Hello, fellow traders. 'Tis I, the rumpled one. Thursday, December the 28th, the year 2017. Price action, continue or stop and reverse. When you think about it, price either continues the direction it's been going or it'll stop and reverse direction. That's it. See, price action is so simple. Why some people out there try and make it complicated or seem complex? Maybe it's to sell you their book, their course, their tape, their seminar, their indicators, their method, or a combination of the above. I don't know. There's one guy on one forums trying to tell me trading, is more complicated or more complex than the way I was presenting it. It's like, well, for him, that may be true, but for me, it's not. But what works for me might not work for you, so I understand that. There's really no reason to debate it. I put these things out there. People watch the videos. Some people learn from it. Some people profit from it. Some people think I'm full of it and they just ignore me. And some people, go out of their way to basically tell the world that I'm a bad person. I'm a spammer. I'm a troller. I'm a this. I'm a that. But, that's on them. That says more about them than what it does about me, because I've been around for decades at this trading game, so I'm still in the ring. I've seen many come and go. Okay, enough with that. Let's move on. As always, one of the things you have to be concerned with is your money and risk management. And if you need more explanation, I've done a video or two on what you see here. And let's look at the weekly chart. We've been watching the Swiss franc Japanese yen this week. And here on the weekly, I believe yesterday it popped through the close, but you can see here it broke out of the wick zone, the weekly wick zone right here. Broke across this horizontal line. And let's see, we are up almost 30 pips from here to here. So if you took that trade in today's trading session, you are making pips. And you can see right here, we dropped down to the daily. We've got yesterday's high. It came down, put in a low, turned around, boom. So you see, it was going in this direction. It stopped. It came down in this direction. It stopped. It reversed. And then, as you can see, right here, it's continuing the previous 3 days direction. And right here you can see if you took the open crossover, you're up 58 pips. And let's see, we've got a range of 72. That's kind of healthy. And actually looks like the yen's picked up. We've got 68 there. Got 82 on the dollar Swiss and 80 on the dollar Canadian. So it looks like there's some life there. The New Zealand pairs look like they've settled down. So you can look at the range just to see where the action is basically. Moving on, once again, we've got the buy zone. You triggered here. If you took that first hour trade back in the Australian session, you took some heat, and then you came out here. And if you wrote it out again, maybe you took some heat again, and then right here or here, it should have been time for you to pop out of that trade for a minor profit. If you went long here, you took some heat, but as you can see, there's a profit. So 114.99, you're at 47. That's about 48 pips to the upside, taking the buy zone trade. Rat zone, you can see here it put in a low. But right here, when price when the market first opened for that session, you know, these zones are overlapping, but right here, and the zones would still be overlapping, but you can see the crossover, you see the low, you've got a red, you've got a green, so there's a turn trade here, red green turn trade, red green turn trade, all of those you can see here, red, green, and green breaking in a high. That's your rat reversal. And once again, you see here a trigger at 114.95 would put you up over 50 pips on the rat trade. And for those of you who like the pivots, here, if you faded the pivot, it only got to the top of the channel, which is the distance between the pivot and the midpoint. That's what determines the top and bottom channel. Since there's only one midpoint, you flip it over. And so you see here it came in, left it, came back in, left it, came back in. So it was trying to tell you to take your profit from from what, 89 to 78. That was a 10 pip profit right there. And as you can see here, R1, R2, it hit it. If we jump up a time frame, you can look and see we hit the weekly R1 here. There's the daily R3. There's the monthly open. There's the monthly R1. So you can see here what price is doing on the pivots. Once again, a profitable trade. Simple price action right here. Crossing, crossing, taking the candle color at the cross here. If you took that candle color at the cross, you would have been stopped out, but there was probably nothing really telling you to go short. It didn't break anything. So once again, you have to look at price action, and you don't just take one part of it, you have to look at it in totality. Basically, new highs, new lows. And so you had a new high here, a new high here, you have a higher low, and you see here, why would you go short if it's not making a lower low? Just that, you know, in other words, it has to stop and reverse. Now, talking about stopping and reversing, what does that really mean? Well, price came here, it stopped, and then it came back here. But see, it didn't quite really reverse. See, it's just kind of right there, and then you see it come up here. So right here is your continue. This from down here would be a reverse. Technically, yes, this is a reverse. This is a reversal, but it's basically, you see, you had buyers pushing up, sellers pushing down, filling more buy orders, pushing up, pushing down, filling more buy orders, and then it goes up. So what you want to do is you want to see a clear break. So here you've got down, you've got down, you've got a break. It's telling you price is going up. See right here, you never really got that break. So price never told you it's coming down. See, on right here, it did break, so it's coming down, but it's starting to reverse. It's not making a lower low, so it's time to take those few pips off the table. Plus, it crossed that line right there. So you just have to look at it. So if you took that line and it's coming back out. Now, of course, it could have gone like that, but the woulda, coulda, shouldas is what takes pips out of your portfolio. You want to put pips into your portfolio. And once again, just looking at horizontal lines from the previous day, you can see here a clear break on the green H1 candle and to the moon, right? And we're looking at the wick zones. Once again, price doesn't like staying in the wick, and this was only a 2 pip wide wick. It's just like trading a crossover. But once again, on these tiny wicks, you know, 1, 2, 3 pip, that's just like trading a crossover. You just take the trade and go for it. You can see here it dipped in, dipped here. Once again, higher lows, price action tells you which way price is going. And looking at the highest open, lowest open, you can see here we got a low open. No, we got the lowest open here. This is the highest open. Okay. And if we flip over, why did it do that? Let's flip over to the 1 hour chart. You can see right here, there's the highest open, never came back. You can come down to the M5. You see, we put in the highest open, but never really. I mean, if you took the price action trade here, it stopped. You have to get out because price is just pushing too hard to the upside. And if you look at the H4 candle, you can see here these big ones. These are what we refer to as steamrollers or freight trains. If you stand in front of either one, you're going to get flattened. It's just that simple. So you don't stand in front of the H4 freight trains. You just don't do it. It'll flatten you. Let's put this back 15. Okay. And just fine with the trade reminder, it's pretty much telling you what's going on here. See, we've got a previous range on the D1 exceeded, price above the upper wick zone. And right now it's 4.5 pips or 4.4 pips now below the D1 high. Higher high, higher low, higher high, higher low, higher high, higher low. Price is going to the upside. Okay, my old TRO multimeter candle color telling you, you can see here on the lower time frames it's pulling back a bit, but the upper time frames are saying go. So this is what you look for. You look for this. You're looking for a pullback. So you wait out, and then at the beginning of the next 15-minute or 30-minute candle, you then go back in long, or you make your first entry long. And oh yeah, we still had the squigglies from yesterday. Let's put this on the Swiss franc. This is for you, pro. Okay, right here you see you've got price action, red, green. You got the 2-ball, and there's down. So if you wait, okay, now you've got the crossover and the close. You left about, oh, let's see, right here 38, and this is 72 right here. Well, let's give it to you right here. As soon as this histogram plot's over, we won't even wait for the red line. We've got a positive plot on the histogram, but once again, you left about 30 pips on the table waiting on MACD. And you know, yeah, you could start playing with these numbers to try and you know, curve fit it. It's not going to work. Just use this saying, okay, this is moving up, but you've got your price signal. You don't even need to be looking at this. Okay, pro? So that's it. Just remember, price action, price will stop. It'll continue in a direction, continue. It will stop. It has to stop if it's going to reverse. Okay, so it stopped and then it reversed. So that's it, fellow traders. I hope this helps. Feel free to ask questions if you have any. And oh, one quick thing. You can see here the last red candle. Okay, price breaks out to the upside. Good for over 20 pips. I forgot to mention that earlier. The last red candle, green candle, right there. So, as always, fellow traders, it's not what you trade, it's how you trade it. TheRumpledOne signing off to go drain the banks.